now, traders, what is good. So this lesson is going to be about liquidity. Just basic though. I'm literally going to just get into the basics of stuff. Explain what liquidity is, why we need it, why it needs to happen for price to move, and how we can capitalize off of it and actually make some money. And I know this is a really, not experience. It kind of is advanced to be throwing in a master the basics course, but listen, I'm going to keep it basic for you. I'm going to show you and explain to you, hopefully, the most basic way I can of what liquidity is and what a liquidity sweep is and where liquidity actually is on the charts. How you're looking for it, because it kind of ties in with support and resistance. There's going to be a lot of liquidity sweeps at support and resistance. So let's get on to the charts and break it down. So liquidity, this is the word that scares most beginner traders. I'm sure you've probably heard of it, but if not, let's break it down. So the most basic way I can explain this to you is like this. So obviously when you see red candles and prices being pushed down, the sellers are in control. So every time someone's selling, taking sell positions, they're definitely placing a stop loss somewhere. Most traders place stop losses, right? You might see me in some of my videos where I don't place a stop loss and I take profit. It's because I'm trading for seconds. I'm in and out of them trades. I'm handling my risk. You know what I mean? But it is a risky move. So most people are using stop losses. Every fucking trader with a brain should be using stop losses. Say, I know I'm in a downtrend. I want to put my stop loss above these highs and target these lows because we're in a downtrend. So let's just say that. Perfect trade, lovely, whatever, right? This is how people trade. Let's look for another example. Okay, cool. This is an example too. So let's just delete that one. Go back to a point in time where I knew we was in a downtrend. So let's just look for a candle to get in. Cool. So I get in on this lovely red engulfing candle, right? Don't know what an engulfing candle means. It means there's a candle larger than the candle before it. That's an engulfing candle. So boom, stop loss. But there, I think I'm safe. I'm targeting these lows, all right? Cool. I smashed the trade. Now let's say I was a trader who goes to work, because this trade's on a 1 minute time frame. So, just say I got in this trade and I went to work or whatever. I was, because this trade lasted 8 minutes, all right, or whatever. So let's just say I wanted to go about my day, my stop loss day. I feel safe, cool, whatever. I'm doing my thing. I know I got a stop loss. Now, I'm going from market structure and I'm putting my stop loss in a safe place. Before moving too far down, buyers are going to want to push price all the way back up and take people's stop losses before moving, aka liquidity sweep, all right? So let's let it run. Oh, wow. To be honest with you, this trade would still be open. That have not been swept, so that's okay. Okay, cool. It didn't get swept. So this is not a perfect example, but you know what it is a perfect example of? Why you should always put your stop losses above structure, all right? So, okay, cool. Didn't get swept, but let's just say you put your stop losses above the candle body closes, okay? And you would have been swept. This price would have come up. Oh, my bad. Price would have come up there. And this is how I can tell you I know is a liquidity sweep. This price came all the way up. Say people's stop losses was there instead of, putting it above the wicks. Just put it there. Boom. It comes up and then you get a big drastic red candle straight after. So you know this is a liquidity sweep. And if I go to the 5 minute time frame, I can almost guarantee you this is going to be a wick. There it is. Wick. So this big green wick was the liquidity sweep and then it dropped. Let's go to a bullish examples. Okay. So cool. Bullish example. We got market structure making us higher highs. Okay. Cool. See this big green candle. Nice. We get in. Put our stop loss below the market structure and hope that we carry on up. Price comes down, sweeps out the stop losses and probably carries on up. There we go. So what did it do? Let's take a little look, run it back and really get into it. I'm going to use these little purple boxes as stop loss examples. So people's stop losses are there. There's going to be some stop losses below these lows as well. And that's the safest place you could put your stop losses. Okay. Now, price needs to take liquidity before it can shoot to the moon. It's never just going to carry on without taking liquidity. Okay. So comes down, takes everybody's stop losses and then boom. It's a big fuck off green candle telling us, cool, swept everybody's stop losses, taking everybody out the game. Now I'm going to carry on about my business. Okay. So that's literally liquidity sweeps. They happen everywhere. Like, believe it or not, even this is a liquidity sweep. We're clearly coming down. Boom, making lower lows. Cool. So people's stop losses are going to be in this area. if you're entering a sell, it's going to be stop losses. Okay, boom. See how it just come up, stopped everybody out, and then dropped dramatically. Perfect example of a liquidity sweep. Wicks come up, stop everybody out, give us a big red candle, tell us I've done the liquidity sweep, now I'm ready to drop. There we go. And it happens all the time. But all you gotta think is, if you're in an uptrend and you're placing your stop loss, below structure, let's take a little look. Let me show you. Even though we're clearly in a bullish market, in an uptrend, believe it or not, there's going to be a lot of traders who's pushing money into downs, putting money into sell positions, thinking, right, I can control the market. We're pushing this market down. They don't want to wait for the pullback and get on a buy, because they genuinely think this is the reversal. This is where the downtrend starts, and they want to capitalize on massive moves. And that's why price gets pushed down and we get pullbacks, because there's sellers fighting with buyers. Sellers are pushing price down, and buyers are just carrying on up and collecting liquidity to move. Okay, so yep, there we go. Sellers have just pushed price down, but the stop losses were there, targeting these lows, and hoping that they've just caught themselves a downtrend. What does the buyers do? Come back up and just take their stop losses out. That's why you see red candles in green bullish trends, because there's people anticipating reversals and selling in an uptrend, basically, and just getting stopped out. That's literally all it is. Look, more sellers just pushing price down, thinking, yeah, the price is going to come down now. I'm going to catch myself a sell. Boom. That's literally liquidity in a nutshell. So where's liquidity lying? In an uptrend, liquidity is going to be everybody's stop losses below every single push up. So it's going to be liquidity there, liquidity there, liquidity there, liquidity there. And it just keeps going. And what happens if it doesn't get swept and it doesn't get taken out, while we're trending up? You can bet that in the future, price is going to come and it's definitely going to take it out. So here we go. Boom. You see what just happened then? That's a pure liquidity sweep. Even though it's probably a news event, it don't matter. That's liquidity sweeps right there. So you got an uptrend. Everybody's stop losses are being placed there. We're pushing it up. Put my stop loss below structure. Safe. Cool. People who want to maybe swing trade and invest long term, they think they're safe because they got in all the way down there, and they place their stop losses somewhere there. Keep entering every single time they break highs. They're just entering and they're holding their trades. And there's so much money in this one uptrend there. There's just so many people who've put their money on buys going up. Okay, let me show you. From there all the way there was 11 hours. So it took 11 hours. People's holding their trades, whatever, going about their day, going to work, thinking I'm in a lovely uptrend here, I'm fine. 11 hours to make this uptrend. But it only took 5 minutes to take everybody's stop losses with this 1 5-minute candle, this big red one, liquidity sweep. And what does price do? Carry on back up. Absolutely crazy. But yeah, that's liquidity sweeps. I see another one there. When you see them, you're just going to see them all the time. So look, once again, I'm going to try and be as quick and basic with this as possible. Boom. You're getting in on an uptrend. You put in your stop losses below structure. You get in there. So people put their stop losses there when they're in an uptrend. Simple. Now, what's likely to happen? Boom. They get swept. It's a big wick. Probably going to go back up now. I've taken everybody's stop losses. Nope. Kind of went back up for a little bit, but look. Boom. It's just, honestly, these massive moves are to take everybody out the game who's been putting their money in these uptrends. Like, look. Go to the 15-minute time frame. So say you got in all the way down there. Cool. You've just caught yourself the beginning of a trend. Lovely. Fucking lovely. Price is pushing up. You're loving it. Do you know what I mean? Like, when did you get in? You got in 17 hours ago. Whatever. Call myself an uptrend. I'm big in the money. Like, look. Let's just say this. It's just your stop loss below there. Boom. Monster 1 to 4. So you could have 4 times your money already in under 24 hours. You're in loads of profit. Now what happens? Boom. Sweeper. So you just got taken out of the game by this big move. Your stop loss just got smashed. Everybody's stop losses just got smashed. And yeah, that's just how liquidity works, honestly. So they're on every single time frame. Once again, perfect example of liquidity. We're in a downtrend. Boom. Making swing lows, swing highs, whatever. People's stop losses all above this area. Stop losses everywhere. People just placing stop losses. Boom. Gets swept the fuck out. And then comes back down and targets the lows. So think about it like this. Stop losses are there, but also the buyers who pushed the price up, stop losses are down here now too. So even though price came and took everybody's stop losses from this area and then dropped, it's coming now to take the buyer's stop losses too. So boom, that's how the markets move. It literally moves off liquidity. So the questions you need to ask yourself is, do you want to become a part of liquidity, or do you want to be smart and wait for these liquidity grabs to happen and then get in? Like, how can I tell you I know it's a liquidity grab? Like, what? How do you just not think, oh, it's just a reversal, man, it's just going to keep trending up? Majority of the time, once price comes and grabbed everybody's stop losses from this area, it's going to print a big red candle, bigger than the green one. There we go, big red candle. So now I know liquidity's been swept. I can put my stop losses there, whatever, but above these structures, and target the buy side liquidity. Okay, boom. So that's just how it is. Like, that's just how liquidity works, you know. But being swept out is normal. It happens to everyone. You're not always going to be able to avoid liquidity sweeps. Like even this is another perfect example. I just keep seeing it now. Keep seeing it. So we got sellers pushing price down. Cool. They're putting their stop losses there or whatever, and then they're getting swept like this. But also, let me just tell you something. This is how market manipulation works. This is how liquidity works, okay? Not everybody's sitting on their computer getting ready to buy or sell. A lot of people are setting limit orders, buy orders and sell orders, okay? So they're saying, right, they're putting their money by there, they're putting their order by there, and they're saying, okay, if price gets there now, I'm betting that it goes up and I want to buy, okay? So let's just take a little look. This is how people get manipulated in the markets. Remember what we talked about with market structure. So this is obviously the lower low, lower high, lower low. What happens? Price comes and closes above, breaking structure, making a new high. So people are thinking, right, structure's been broken, we're going up, we're gonna cause an uptrend. So they wait for a pullback. Boom, there's the pullback. What are they doing? Placing their buy order there, and they're going about their day, you know, and they're thinking, right, I've just put again a couple of thousand on there, or a couple of hundred, whatever, nice size stop loss. I'm just gonna hope that when it gets triggered now, because we've broken structure, it's gonna trigger and it's gonna carry on up and whatever. What happens? You get a wick. Boom. So price shoots up. Yes, everybody who set their orders. Imagine how many thousands and millions of people have had orders there set to buy. So all their orders are set to buy, right? A lot of people. Boom. The wick comes up, taps in, opens everybody's positions, and drops. So now I've just taken out everybody's orders and carried on. Okay, it's market manipulation, it's liquidity sweeps. But like, I hope I didn't get too deep into that and confuse you. I mean, a lot of you, you know, assuming it's total beginners because it is called Master the Basics. But yeah, that's pretty advanced. I think this is a pretty advanced lesson to throw in there. Don't worry too much, but I'm just trying to show you early off from the jump, you know, how the markets move, why they move, and what liquidity is. Don't be scared when you hear liquidity or liquidity sweeps. You know, it's just part of trading. So, in a nutshell, the most basic way I can explain it one more time is every time there's a push up and a pullback, okay, there's liquidity lying there. That basically means all the buyers that have just pushed this price down have put their stop losses like this. And every time there's a push up, there's liquidity also there. And the buyer stop losses are there. Boom. That's just all it is. Now, price is going to come down at some point and go, boom. Take all the stop losses out. Carry on. Take everybody's stop losses out. And come back. Now, that's just how liquidity works, right? So that is a lesson on liquidity. Didn't want to get too technical and too advanced in this course, but I kind of did in this lesson. But yeah, I hope you can take something from it. That's a lesson on liquidity. Let's move on.